Hi there, welcome to Kneppy Invest and welcome to May 13, 2024. We have about an hour left of trading today, and so far, all the indices, well, the five indices on the front page of Mark Index are down. Three of them were actually up near open or on open. The small caps, all tech and resources were or did open up, but a little bit of weakness through today. Have seen all those three fall, and all those three indices are now below the ASX 200 and the odds, or the XGO and the XAO. So the agenda for today's video is I'll go through what has happened on the ASX today, go through the best gainers and the biggest losers. We'll also have a look at the top 5 announcements of the day, and those 5 announcements are Fletcher Building, Southern Cross Electrical Engineering has made it onto the list again because of 2 announcements the company has released. A company called Intelligent Monitoring Systems or something like that, ticker code IMB. They actually released a profit upgrade, and whenever a company releases a profit upgrade, I'm going to have a look. Another company called Anax, ANAX, I believe, ticker code ANX. Their share price is up 40% on the back of a good announcement. And then we'll have a look at 2 companies, Byron Energy and a company with the ticker code JTL. And there is a reason why I'm lumping these 2 companies together, and that will become apparent when we have a look at those 2 companies. Now, a few companies that did not make it onto the list today include Life360, St. Barbara. In fact, I might have a look at the chart for that company and then have a squeeze at their presentation they released today. And also Fleet Partners released the half-year results, but they did not make it onto the top 5 announcements of the day. Another company with ticker code ERW, I think had a pretty good day. I think it's called Irana, or something like that. And they did not make it in the top 5 announcements for May 13th, 2024. I wrote down actually WTL, cheap, have a look at it. And I did have a quick look, and the share price was down like 13%. So maybe it's even cheaper now. And I'm supposed to sell Task today, but that trade has yet to go through. And also wrote down Linus Rare Earths, breakout question mark. So have a look at that. I did actually feature that company in my technical update video that it did release on Sunday, the 12th of May. So let's get into it and let's have a look at what has happened on the ASX today. So at this point in time, you can actually see here, this green line, which is the all tech, has gone lower all through the day. So a little bit of weakness in the technology sector on the ASX today. So let's have a look at the sectors. Discretionary, healthcare and utilities and staples all up nicely above 0.25%, while industrials, materials, financials, IT, real estate all down by more than 0.2%, while energy is down by more than 1%. So that would include gas, petroleum and uranium, and maybe a few other companies there. So a little bit of weakness in energy. And if we have a look at the indices, in fact, all the indices on this front page, are actually down apart from gold, but there's a little bit more indices than that. So I would expect a few of these indices to be up, including consumer discretionary, healthcare, consumer staples, utilities, and gold, while the worst performing index is energy, which is not surprising. We also have emerging companies, which is down. I'm just going to open up the indice for this just to see if there are companies listed in this. No. What if they have a list of companies in ComSec? Sometimes they do for these indices, but sometimes they don't. No, they don't. Constituents, nothing. There are currently no constituents to display. Okay. So overall, would say today has been negative. Yeah, most everything is down. But that doesn't mean we're not going to see some companies' share price rising a fair bit today. So let's have a look at the top gainers on May the 13th, 2024. Number 1 is Burley Minerals. That did not make it even into my honorable mentions of the top announcements of the day. Share price of that company has run hard on no announcements. So we can wipe that from consideration, in my opinion. There's that company, Irawara Resources, up 70.8%. They did release an announcement. Also think they received a price query from the ASX. Yeah, they received a price query, and they also released an announcement identifying large stacked pegmatite swarm. Market has found a little bit of interest in that particular company, but to be honest with you, I've decided not to feature this company in my top 5 announcements. I think the main reason is share price has been in a massive downtrend and bit of interest in one day. And if you just look at the one-day candlestick, a lot of selling has come during the day. In fact, the share price at one point today was as high as 15 cents, and right now it's at 10 cents. So the share price has fallen 33% from its high, even though it's up 70% today. And just the announcement itself, large stacked pegmatite swarm. I'm usually not going to be induced by that sort of announcement. So it's Irawara. Otherwise, there's Anax, which did make it into my top 5. In fact, I haven't numbered it yet, but I'm going to put that company, Anax, at number 3. We'll put Southern Cross at number 2 and Fletcher Buildings at number 1. So there's Anax at number 4, up 50%. So maybe it should be a little bit higher than number 3. And then otherwise, I can't remember any of these other companies releasing announcements. So let's go to the market cap filter, or by market cap. So we have a Bank of South Pacific Financial Group, up 9.21%. That share price or that stock can be quite volatile. Jupiter Mines, I'm pretty sure the chart of this company looks absolutely stunning. And maybe it just keeps on rising. Look at that. Although today, I think, could be the top. I'm going to call it. So share price got as high as 41 cents. Now it's 37 cents. We have started to see a little bit of selling in this company. So wouldn't be surprised to see that selling continue as we go through the next few days. Share price has run up a lot in the past 2 months, up from 17 cents to 37. So it's more than doubled in 2 months. And if I was a shareholder, I'd be really excited about that. And there's Southern Cross Electric and Engineering coming in number 4, up 6.57%. And that's sort of understandable. They did release a profit upgrade today. Now, it's not my favorite type of profit upgrade, and I'll explain why when I talk about that company later in the video, but I just had to come in at number 2 because it was a profit upgrade. And there's Integrated Research going strong again. It's another really good day for that company, up 12.4%. I'm going to have a look at the chart as we go through or towards the end of the video. And as it keeps rising, that position in my portfolio is becoming quite large. So eventually I might want to take some profits, but at this point in time, the market just loves that company, and understandably so, because of their profit upgrade or their whatever they released. Their trading update was absolutely stunning. One of the best trading updates I've seen released by a company for a while, and I think the company was undervalued to start off with. And there's Intelligent Monitoring Group, up 8.2%. And I will also talk about that company when we look at the top 5 announcements. Let's have a look at the losers. There's Byron Energy, and that is one of the companies that I'll talk about, down 22%. The other company might not have made it, JTL, but I believe that company is down 80%, but the price is not above 1 cent. For those who don't know, the top losers and best performing companies in market index have to have a share price above 1 cent. JTL, which I'll talk about, group that together with Byron Energy, Jayex is down 75%. And you'll see why the share price is down 75% when I talk about that company. So otherwise, Byron Energy, worst performing company, apart from all those companies with share price below 1 cent. And I'd say Byron Energy and Jayex are probably 2 of the worst performing companies on the ASX today. Otherwise, nothing here. A few companies I do know about, but not getting that interested in the share price decreasing just yet. And the other thing I do look at is turnover. So Omni Bridgeway down 13% on higher turnover, but that's a law company, and I have no interest in law companies. Let's have a quick look at the chart for Omni Bridgeway. It's probably an ugly looking chart. Oh, that is an ugly looking chart. I was going to say it's probably an ugly looking chart, and that's an ugly looking chart for Omni Bridgeway. Perhaps a bit of volume coming in, so maybe it's nearing a bottom, but I still don't have any interest in that company. And let's go by market cap, and I'm assuming Fletcher Building is number one. Yeah, down 10.6%, and that is the top announcement of the day. Judo Capital there. I am trading Judo Capital, so there is a potential I might take my profit, which is probably about 10% now, down 6.6%. I'm not sure why. I don't think the company released anything. This could just be a little bit of negative sentiment in this space, in the banking sector, or the share price has rallied. So this is why I don't sell, don't have stop losses. Just imagine if I put my stop loss at $1.24, which I don't. We'll have a look at Judo Capital's chart at the end of the video. And I also will have a look at Weebit Nano as well. I was trading Weebit Nano, and then I sold last week because it wasn't going in my direction, down 7.9%. So definitely have a look at that chart as well. And Southern Cross, after a really good day last week, a bad day today. So the problem with those sort of companies is they can be quite volatile. And Ainsworth has had another bad day. We'll have a look at the chart for that company. So at this point, we're going to have a look at a lot of charts, but that's okay. And Southern Cross Media Group, that's interesting. I'll talk about why that's interesting in a second. And otherwise, that's it. Now let's have a look at the announcements. But what I'm going to do first is I'll show you the announcements through CommSec. And I wasn't confused, but I got really excited at one point. So, and of course, CommSec is not going to, there he goes. So this is done by Filter, which is only price-sensitive announcements. And so I was just going through this. So NAB is launching a capital notes. So are they raising their debt? Interesting. And there's Fletcher Building, the first negative announcement of the day. Or in fact, one of the first price-sensitive announcements, and it was negative. And then I just saw Life360 release their financial information. I was going to feature that company, but it did not make it into the top 5. And then I saw Southern Cross update on non-binding indicative proposal to acquire. I was like, didn't realize Southern Cross Electrical Engineering was acquiring a company. And then I read further, Southern Cross Media Group, of course. And there was some sort of potential acquisition of Southern Cross and A1, and I don't really follow either of these companies, low-quality companies that are totally in the wrong sector, and I don't care about that. Anyway, Southern Cross Media Group is down 8.5%, while the other company's down 0.6%. But then, lo and behold, just above that, Southern Cross Electrical Engineering acquisition of MDE Group and a profit guidance upgrade. So it's really interesting that Southern Cross Media Group just released their announcement 1 minute before Southern Cross Electrical Engineering, and it did fool me for like a split second. So that was my interesting story in the morning. But otherwise, let's have a look at these top 5 announcements of the day. We'll start off with Byron Energy and Jayex. So Byron Energy is down 21.7% on announcement that they're leaving or delisting off the ASX. Voluntary delisting from the ASX. And one of the reasons they did give is because the company's undervalued. Well, it's what do you call it now? So shareholders are just getting out of this company because they don't want to be owning shares in a company that is not listed on the ASX. And I've seen this time and time again when a company says, we think we are undervalued at these current levels, and then they delist and the share price absolutely plunges. It's just ridiculous that they do this sort of stuff. It's not a reason to delist because you're undervalued. Buy back your shares. Buy back your shares if you can. Anyway, so they do go through the reasons they're doing this. Here it is. Share market trading price undervalues Byron assets. Well, now you're really undervaluing the company. The other thing I should mention is when a company is not listed versus a company that is listed, typically the company that is not listed tends to be significantly undervalued or lower valued than the company is listed. That is absolutely true in all sectors, no matter what, that the unlisted companies tend to be cheaper or valued less than listed companies. Anyway, So in the board's view, the trading price of Byron shares on ASX over the past 2 years in particular does not fairly represent the value of the company's underlying oil and gas assets and exploration and valuation assets. Do a share buyback. That's the way you create value for the shareholders. If you think the company is undervalued, you don't delist off the ASX. It's not that much. And I do go through the costs here somewhere. Or raising capital is highly dilutive, so don't raise capital. Well, actually, I shouldn't say this because I don't know this company too well. Maybe they're burning through cash and limited trading liquidity. Who cares? Cost savings. Or they're going to save $260,000 a year. Whoopee do. Anyway, so I'd be pissed off if I was a shareholder of this company. And just let's have a look at the most recent Appendix 5B just to see if this company is burning through a lot of cash. And maybe that's why they're undervalued, because they're burning through cash. Let's have a look. Yeah, they are, well, based off the last quarter, they are burning through cash. Only $9.5 million in receipts, and they burned through $2.6 million of cash in the quarter. And for the year to date, operating cash flow positive $45,000. So that's probably why they can't do a share buyback, because they're burning through cash and they just don't have the cash. In fact, the cash on hand fell from $6.6 million to $3.3 million. I would be getting all out if I was a shareholder of this company. So let's have a quick look at the chart for Byron Energy. Would there be any interest in this company at all during this period? No. There was no reason to even be thinking about owning the shares in this company. Maybe back in November, I could have been maybe in June. What's that word? I might have been interested. It's not the word I was looking for. I might have been following this company a little bit more closely back in November, because when I see a chart like this, I go, oh, this is starting to look more interesting. The only problem at that point was there wasn't much volume, a little bit high volume, but not a massive increase in volume. And that trade went negative straight after that. And the share price has, more than halved. In fact, it's gone down 66% or so since then, not helped by today's news and massive volume coming in because shareholders just want to get out. Now, it seems like share price fell 23.4% on the 23rd of April. So has this been in the works for a while? No. That's when they released this announcement. Production update and G5 recompletion results. The market didn't like that. So that's another thing. The market doesn't like what you're doing. So don't make excuses about the market is undervaluing your company and your assets. It's valued right just based off what I'm seeing here and just based off the market reaction to some of your news flow. And again, if you can't do a share buyback, then make sure or turn the company into a profitable company. I don't care about doing capital raisings. It's your own fault the share price has fallen to these levels because you have not performed. Markup 64.7. So I might be being a little bit unfair on the company and the management, but I just don't think delisting is the solution here. I just don't think. How are you going to raise money if you're not listed on the ASX? Who's going to say, well, now I'm going to give you some money now because you're not listed? I just don't think I don't understand that philosophy. Okay, and because I've lumped Byron Energy and this other company, Jayex, you probably know what has happened to Jayex today. Share price has fallen 70%, 75%. Why? Voluntary delisting from the ASX. Well, there you go. So let's have a look at this company's most recent Appendix 4C released on the 2nd of May. We'll also have a look at the chart. Share price now 0.1 cent. In fact, get out if you can. And let's have a look at the most recent Appendix 4C. Would I have been even looking at this company based off these numbers? So cash receipts 951,000 and operating cash flow negative. And to be honest with you, I can't ever, and proceeds from borrowings, they've increased their borrowings, by the way. And cash on hand is $19,000. And they have $4.3 million in debt. I'd be running for the hills if I was an investor in this company. Okay, so why is this company delisting? It's a voluntary as well, and I wonder if they mentioned. I actually haven't looked at this one. I wonder if they've mentioned it's undervalued. Let's have a look. Reasons for delisting: lack of liquidity. Let's have a look at liquidity. We'll just have a look at the chart. Well, I'll tell you what, there's probably a lot of liquidity today. Yeah, really good liquidity today because shareholders are getting out, running for the hills. And the chart looks absolutely horrible. That's another reason why I wouldn't even be thinking about buying shares in this company. Chart is absolutely horrible. There's no reason the company is turning things around. And even today, why? Uh, so illiquid, fundraising difficulties because, again, the company's burning through cash. They've got debt. I would not even think about giving this company any money. Disproportionate impact on price. As only small numbers of a company shares are being traded on ASX, this has on occasion had disproportionate impact on the share price. A low value trade or a trade in a small number of company shares could have a marked impact on the official ASX market price. And there is a risk that a trade of only a few company shares could cause the reported price to change significantly, as some recent trades have proved. Well, you've completely, really fixed this problem because you're delisting from the ASX voluntarily and the share price has dropped 75% and it can't drop any further. Now, can it? It can go to zero and people lose all their money. Listing costs, not much, although they don't have much money to pay their listing costs. It says here $500,000. And there you go. Business is based in the UK. That's another reason. It's probably fair enough. Consequences for delisting. You can't trade your shares or inability to trade shares. No, duh. That's why shareholders are getting out. Removal of ASX listing rules protection, restriction on public capital raising, no, duh. So what's the benefits? I just don't see any benefits for companies delisting on the ASX. In fact, it's complete opposite. I just see a complete list of negative things and not many positives. In fact, the only positive thing is you save a little bit of money because of listing rules. That's about it. Okay, so two really negative announcements. Why are companies delisting from the ASX? Now, to be honest with you, looks like both of these companies are dog stocks, and I probably would even think about buying shares in this company, even as trading trades right now, as technical analysis trades, because chart looks weak, both companies look pretty weak. Okay, maybe we can find something positive in company number 4, Intelligent Monitoring Systems Group. Intelligent Monitoring Group. Share price has rallied 8.2% on the back of a profit guidance upgrade. My favorite type of announcement. Now, I do know a little bit about this company, and we'll have a look at the Appendix 4C in a second or so. But we'll first have a look at the profit upgrade. I love profit upgrades. Now, technically, this is not a profit upgrade. It's an EBITDA upgrade. EBITDA and profit are not the same thing. Now, what does Charlie Munger say, or used to say? EBITDA are BS earnings. Anyway, he's right. Earnings before interest, taxation, depreciation, amortization. Now, interest is very important for this company. That'll become apparent soon. And I'd even say depreciation, amortization might be. I'd say possibly this company is capital intensive and they have made quite a few acquisitions. So interest is important, depreciation is important, amortization is important. So EBITDA is not that indicative of how this company is performing. It might be slightly indicative, but not truly indicative. So I wouldn't actually fall victim, not victim, that's probably the wrong word. I wouldn't fall for this type of announcement. So they are raising their expected underlying EBITDA from 29.8 million to between 32 and 32.5 million. And they also have an underlying analyzed EBITDA, whatever that means. And let's have a look to see what the managing director have said. He's just saying that the staff has worked hard. That's nothing about the economy, nothing about things are moving really well, and there's a lot of tailwinds behind them, just that the staff is working hard. Now, let's have a look at the most recent Appendix 4C for this company, and there is one big reason why I wouldn't even think about buying shares in this company, even though they are profitable and receipts are pretty high. So for the 9 months to date, $102 million of receipts. But the company was only operating cash flow positive by $1 million. Now, for the quarter, they were operating cash flow positive by $5.3 million. That is interesting for that one quarter, but it's only one quarter. For the 9 months to date so far, barely operating cash flow positive. Now, one of the reasons behind that, it seems like there was a business acquisition integration cost, which cost $3.1 million. Now, the other thing to notice is Section 1.5. interest and other costs of finance paid. In the quarter, 2.1 million. It's a real cost. $8 million for the year. Interest is a real cost for this company because they have a massive amount of debt. So we're going to have a look at the debt in a second. Property, plant, and equipment. Company is capital intensive. $5.3 million in the quarter. $14.6 million for the year. So that's what I would have expected. So just based off capital expenditure and interest, we're talking about $7 million in the quarter, just one quarter, which means if you analyze that, that's $28 million over the year, which means the company goes from EBITDA positive of 33 million or whatever it was down to a profit of very small. That's not taking into account amortization. So in fact, the company might not even be profitable. And let's have a look at the company's debt. So no repayment of debt. And here it is, section 7. $82.9 million of debt. Now, as soon as I see that, I move on to the next company because this company, I think, has a market cap. I could be wrong. I think this company has a market cap of about 70 million. So very similar to the 79.7 million. So before today would have been about 70 million. So this company's debt is greater than the company's market cap. So the enterprise value of this company is more like 160 million. And that alone in itself, the value of this company in terms of enterprise value, I just have zero interest in Intelligent Monitoring Group. Okay, so let's have a look at the chart. And maybe the chart is telling me something different. Share price has increased. Is this a breakout? Is this what I'm looking for? Let's have a look. And well, in fact, the chart was looking interesting and that share price had turned around into an uptrend, but we have seen a bit of weakness in the share price over the past 3 or 4 months. Share price has fallen from 46 cents to 33 cents. So I think these good times have come to an end. We have seen periods of time when the share price, we have seen a fair bit of volume. There was a period of time, 14th of June last year, share price rose 67%. That was or did look interesting. I might have become interested in this company then as a trade if I was following it a little bit more closely. But at this point in time, this is not a breakout. Share price is in a short-term downtrend. And even though share price has rallied 8%, I have no interest just because of that debt. And that's just me. Maybe if you do like I haven't even told you what this company does. They are a security system monitoring company, something like that. Here we go. Provides monitored security and IoT solutions that ensure the safety and protection of Australian businesses. Operates with the highest security accreditation from its 3 monitoring centres in Australia. There you go. They have made quite a few acquisitions, and to pay for the acquisitions, they have had to go into lots of debt. Okay, so coming in at number 3, we have a company that might have, I think it could have had an argument to be a little bit higher, and that is Anax. ANX. Anax. Share price up 34%. Has been as high as 6.8 cents, now at 5.9 cents. So there has been a little bit of selling today. Now, there's a couple of announcements I did have a look at. There was an investor presentation released on the 16th of April, and today the share price has risen on the back of a corporate update. Now, this is a copper explorer company that I'm not sure how close they are to production, because in their presentation, of course, CommSec is going to take 5 years to open it up. So before we have a look at their corporate, I wanted to do their presentation first. So they do have this project, I want to say it's south of Port Hedland or Karratha in WA. I want to say that, I could be mistaken, but should be a, here it is, yeah. This is interesting. That's Indian Ocean. So that's the northeast, southwest. And Port Hedland, I think, is somewhere here to the right. And hoping there's a map in. Come on, presentation. CommSec. It's ridiculous, CommSec. So have a look at this particular presentation. It's really interesting. I had a quick look at it. And they do mention here, Wim Creek, that's what it's called, fully permitted and established mine site with potential for near-term copper production. Now, I was trying to find what near-term means. So they're talking about $410 million of project free cash flows and resource growth potential. So copper cathode, zinc sulfate. So targeting 20 kilotons per annum copper equivalent capacity. So they're talking about the demand for copper, that sort of thing. I don't care about that sort of thing because we don't know what copper's going to do. I'm pretty sure there's a map here. 8-year mine life, free cash flow $410 million. This is important. So $71 million in pre-production capital expenditure, $15 million of working capital. So they need to get that $71 million before they get in production. And if copper keeps going up, this project does look significantly more and more attractive. Now, talking about debt funding discussions and non-binding term sheets with finances. I just want to know how quick can they get to production. That's another thing I want to see. I didn't read it in this, even though it was. Oh, here it is. Maybe they've got no. They don't have where Port Hedland is here. Oh, here it is. Here it is. Yeah. Okay, so it's sort of it's almost directly in between Port Hedland and Karratha. So Port Hedland is here, Karratha is there, and that part of it. It's really weird to see WA coast where the Indian Ocean, the coastline is from east to west almost, and that's just the coastline. If you just imagine WA coastline, it goes like that in that area. So in between Karratha and Port Hedland, and I would say it's close to the coast. So I'd say they probably wouldn't have much transport issues at all. Maybe there's already infrastructure there. In fact, they say infrastructure is ideally suited for a regional processing hub. Anyway, so why has the share price rallied today? So remember, the cash flow or free cash flow of the project in that announcement, that presentation released on the 16th of April was $410 million. Now they've upgraded it. Here it is. They've based off strengthened copper prices. They've upgraded their free cash flow in this project to $520 million. So that's a fair bit for a company with a market cap of 30 million. I think it might be more than that now. 35 million, so slightly higher. So that does look attractive. I do have questions about this company in terms of this project. How quick can they get to production? And $71 million of financing they do need to get the project into production is another question. But if copper prices keep on rallying, this could be a really intriguing copper play. So let's have a look at the chart. And the chart is something else that drew me into this company. Now, what else drew me into this company was just the share price movement before this announcement and the volume increasing. So the share price started to move and the volume started to increase before this announcement, but the company didn't release any news flow. This increase in volume and the share price rallying was on the back of no news flow that I did see. So this massive increase in share price on the 6th of May, up 54%, was after they released no news. There was no news flow on those dates. So the last price-sensitive announcement was the 29th of April, and then this one today. But let's go back to the chart. The chart looks interesting, but a bit of selling today. Share price got as high as, what was it, 6.8 cents. Now it's 5.9 cents. And the reason there is a little bit of selling today is because look at that area there. I can do boxes now. That's exciting. I've got to find where the box is. I think it's in this section here. No, it's this section. So what I'm going to do now is I'm going to draw a box right somewhere there. So in that box, which is from the 29th of December 2022 to the 6th of September 2023, a lot of shareholders bought in that area, in that zone. And where have we seen a bit of resistance, a bit of selling? When the share price got into that zone. Lo and behold, what's happening here? We are seeing a little bit of extra supply of shares on the market because all these shareholders now want to get out of this dog stock. Why do they consider it dog stock? Well, someone bought, just imagine one shareholder, investor, bought at 7 cents, say right here. They like the potential of this company. They bought some shares at 7 cents and they watched the share price fall from 7 cents all the way down to 2 cents. What do you think they're doing? They're going, this is a crap company. What an awful company. As soon as the share price gets back up to 7 cents, I'm going to sell. And what they're doing today, they're just willing the share price to get to 7 cents. It made it close, 6.8 cents, but not quite. So there is that resistance of all these shareholders, probably not a lot, but there are shareholders who bought at that level who want to get out. There's also some shareholders who bought in the past week at lower prices, and they're probably profit taking. The thing that intrigues me is just the volume, massive volume coming in the last 2 weeks. So that alone has me interested in this company. I'd like to see just the share price now consolidate for a while, so all these shareholders who want to get out can get out. So that's Anax coming in at number 3. Coming in at number 2, we have Southern Cross Electrical Engineering. Share price up 7.88% on the back of 2 announcements: the acquisition of MDE Group and profit guidance upgrade. I always like to see the title of announcement with those 3 words. Profit guidance upgrade fills me with glee if I'm a share of a company. But this particular profit guidance upgrade was not as exciting as otherwise. And there's a reason why I was not excited about this profit guidance upgrade as I usually am. So let's have a look at this acquisition. And I think, in fact, this is a fairly astute acquisition. It doesn't seem too expensive. A Sydney-based electrical and communication specialist, enterprise value of 10.55 million, forecasting EBIT of at least 5 million in financial year 25. Strategic expansion of the company's East Coast service offerings, strong operational synergies with Heyday. So Heyday and MD Group have worked together, currently working at the Western Sydney International Airport. What else here? It's not that old of a company. So they do know the company well because they've worked together. MDE is forecast to deliver revenue of $20 million and EBIT of $3 million in financial year 24, and then EBIT expected to increase in financial year 25. And the vendors will continue to manage the business on long-term contracts post-acquisition. Strategic rationale: the acquisition aligns with Southern Cross Electrical Engineering Group's strategy to broaden their geographic diversity and just in the right sector at the right time. I'm pretty sure they do talk about it somewhere here. They talk about the data center sector, and I'm pretty sure, the additional capability also positions Heyday to offer clients a combined electrical, data and communication service and maintenance proposition on completion of its construction projects. That's not what I wanted to talk about. Okay, here it is. Data center fit-outs include a significant communications element, which the acquisition of MDE allows Southern Cross Electrical Engineering Group to self-perform. I do think this is a really strategic and astute acquisition from Southern Cross Electrical Engineering. So this announcement alone would have me more excited about this company. Now let's get to the profit upgrade and why I'm not, shouting with joy right now. Now, this profit guidance upgrade is on the back of this acquisition. That's why they're doing it, not because the pre-acquisition company is performing better than expected. This is just because of this acquisition. And that alone is a reason why I'm not as excited about the profit upgrade. But it's still a profit upgrade. And this is for financial year 25. They don't expect much material change for financial year 24. So we're still expecting significant tailwinds behind this company for the next few years. And they do mention this, I believe. In fact, here it is, this last paragraph here. As I observed last week, not I, but the managing director, with Southern Cross Electrical Engineering Group's exposures to data centers, infrastructure developments, particularly at West Sydney International Airport, and to decarbonise and electrify works together with our traditional markets being in a stable or steady growth environment. We have confidence this growth is sustainable with expectations of further growth earnings growth in financial year 26 and beyond. So the company's management are fairly bullish. I'm fairly bullish because I think they have every right to be bullish. And I think the market is fairly bullish behind this company as well. And you can see that just with the chart. And this is an absolutely stunning chart. Now, the share price might be running getting a little bit ahead of itself. The run has been quite spectacular over the past, well, in fact, almost a year. So back in April, May of last year, share price of this company was 64 cents. So it quite hasn't tripled, but the share price is starting to accelerate up. And I don't like when the share price accelerates. What I like to see now is some sort of consolidation period where the share price goes sideways a little bit bit of a dip or now and then, but nothing too extreme. And I don't see why there'll be massive selling in this company. I don't see why the share price would now fall below about $1.40. If it does, I might even add to my position. Now, this is also a possible add to my position if the share price remains at these levels. Just build on my winning position. Something I've struggled to do in the past. I have now done it with AGL. I should have looked at the share price with AGL. That's the first time I've done where I've averaged up. So that's probably something I could do with this company. Okay, let's have a look at the top announcement of the day. The complete contrast to Southern Cross Electrical Engineering. We have Fletcher Building. Pretty sure this is a New Zealand-based company because they released their announcement fairly early. So construction, something like that. Okay. Fletcher Building Market Update, 7:31 a.m. So I'm pretty sure that means, and it says here, procedural judgment received on NZ ICC subcontract claim. I'm pretty sure NZ means New Zealand. Okay, so yeah, as you can tell, I don't know much about this company apart from they're in construction, something like that, and they are New Zealand based. If you don't know anything about a company, you could just go to the About section if they have it. They don't have it. Okay. But the main things, oh yeah, they are listed on the New Zealand Stock Exchange, according to this. The main thing is this like upgrade or downgrade? Now, we already know the share price is down above or over 10%, 10.25%, which means this is a profit downgrade. So we don't have to really read to understand whether this is an upgrade or downgrade. And the other thing I like to look at is reasons. Companies should always have reasons why it's an upgrade or downgrade. And straight away, they give the reason. So current market conditions across the company's materials and distribution divisions have weakened through financial year 24. Talk about New Zealand volumes and Australian volumes, both lower. There has been also a notable slowdown in house sales in the New Zealand market and an end to the house price momentum seen through the first half of financial year 24. Does this mean there might be some negative trading updates from some other of these similar type companies that are listed on the ASX? Maybe James Hardie, although James Hardie is more global, fairly global. Maybe Boral, maybe I'm trying to think of another one, Adbury or CSR, although quite a few of those companies have been taken out, haven't they? If I remember correctly, all three of those companies, Adbury, Boral, and CSR, have all been bought out. James Hardie hasn't. And yeah, this is a proper downgrade. And they talk about EBIT. So Intelligent Monitoring Group talked about EBITDA. This company's talking about EBIT. They expected EBIT to be between 540 and 640, pretty big range there. Now they expect EBIT to be between 500 and 530 million, inclusive of some restructuring costs related to cost out initiatives. And challenging conditions. Oh, this is interesting. I didn't read this earlier. The company's updated guidance is primarily driven by the following areas: challenging conditions in the distribution division, plus a sharp correction in the Australian residential market, leading to a forecast 10% revenue decline for the Australian division in the second half financial year 24 compared to the second quarter 24, and a combination of weaker revenues and gross margin pressure in certain building products businesses. All right, so that's the negative financial update from Fletcher. Now, was there any reason to be in this company? Now, I can't remember looking at this company's chart in the past and going, wow, I should be following this company a little bit more. So I'd say it's either negative or neutral. Let's have a look. Oh, yeah, no reason to even be thinking about buying shares in this company at this point in time. The share price decreased a fair bit back here in February. So there was a bounce. So obviously there was a bounce in late February because some value investors or some idiot investors said, well, the share price is significantly lower than it was a month ago, so this company must be cheap. So they decided to buy at $3.90. Now it's $2.89. So don't fall for that. Just because the share price of a company has fallen a lot doesn't mean it's cheaper. Just because the share price of a company has risen a lot doesn't mean it's more expensive. Well, yeah, I hope you know what I mean. Share price has gone up. So the share price the valuation of the company has increased, but doesn't mean the company is expensive. There's a difference between valuation and whether a company is cheap or expensive. And I hope you understand that, because that is a fundamental thing about stock market investing, that there is a difference between valuation and price. Is that a way to say it? Price, expensive, cheap, that sort of thing. So people do fall for that. They see the share price of a company fall a lot and they think, oh, this company's cheap now. I'm going to buy some shares. And I think a lot of investors do fall for that trap. Just look at the chart. Chart is absolutely negative. No reason to buy shares in this company just yet. The only reason I might think, and I actually put a line here for some reason, this was a support level for Fletcher Building. Hit the low here back in March 2023, a low here in October 2023, and then it broke through that low here in February. So that was a support level broken. But let's have a look at the weekly chart. This is the telltale sign of a non-high quality company. In fact, you'd say or call this company a low quality company. Chart is doing nothing. The share price just goes up and down in waves, going sideways. This is not the chart of a high quality company. This is going back 15 years. Share price now is the lowest it's been, looks like. So what you could say, this could be an argument. If you take the lows during the COVID-19 financial panic, the share price is close to those lows right now. There could be a bounce at that level. That's the only way I would trade Fletcher Building, is the expectations of a bounce off the COVID-19 lows. That's the only trade I see with Fletcher Building. Okay, so let's have a look at some charts. Let's start with Weebit Nano. I did write them down here, and let's do it in order that I wrote them down. So Weebit Nano, so I did trade this. Now we'll go back to the daily chart. So I traded off this little bounce here, and I thought the share price had hit this support level at $2.80, and I thought I'd just play this bounce. There was a bounce. The share price went as high as $3.20, but then that was the high. And as the share price fell below $3, I didn't expect the share price to go any higher. So I decided to get out of this trade for a very small profit. And when I say small profit, 2 cents per share. So it would have been a tiny profit. And I'm just thankful I did that, because the share price has broken through that support level. It looked like it might on Friday. There was a little bit of buying. We saw, you can just see that by the one-day candlestick, a little bit of buying during the day, just like we saw on the 19th of April, just like we saw back in October last year when the share price bounced. I was hoping there was going to be a similar like bounce, but there hasn't been. So this is a very bearish chart for Weebit Nano. This is another company I would never own for the long term, because they're not a business. They're not a company. They do not have any revenue, maybe a very small amount of revenue, but they have to prove their business model to me for me to get excited about the company as anything more than a trade. Ainsworth released a negative trading update or something, and the share price continues to plunge. And this is another case where you could have bought some shares on Ainsworth on the 9th of May, because the share price fell 17.6%. Share price fell right onto a support level. So there might have been a bounce, but there wasn't. There was a bit of a fight between the Bears and the Bulls on Friday, the 10th of May, but the Bears won, and the Bears have completely won today. Share price has collapsed, down 10%. So no reason to get excited about that company. St. Barbara, they did release investor presentation. I had a look at it today, and this is an interesting, a possible trade. And the chart is starting to look interesting. Share price flat today. So I'll just show you there it is, investor briefing pack. I think they were talking about these 10-year plus outlook for Simberi. It does look interesting. There was a few things I was like, I don't know about that. Oh, this is going to take ages to open up again. There was a few things I was like, the ASIC, the all-in sustaining costs were like 3,000 Australian dollars. And then they mentioned getting down by financial year 28 to 1,300, which is a significant decrease. So I'd like to see that. Maybe I'm mistaken. And of course, CompSec is taking 5 years to open this announcement up. I'm going to see if I can open it up quicker. Yes, I should do that. This is how bad CommSec is. When you give it a 10-minute head start and market index opens it up almost straight away. Here it is. And it still hasn't opened up on there it is, open up on CommSec. All right. I won't go through all that. Yeah, so they're talking about here, there's St. Barbara Assets, financial year 24, all-in sustaining cost guidance, 3,100 to 3,200, which seems pretty high. And that's also true for Simberi operations. And then they go through their expected somewhere here. Here it is. All-in sustaining costs decreasing to, oh, that's US dollars, by the way. Why change from Australian to US? I hate that. Really, really hate that. So they are increasing gold production. In fact, I'd say they are tripling gold production in the next 3 years, although they say here in financial year 25 to 230 kilo ounces from financial year 28 to financial year 28. I'm not sure if that's supposed to be another financial year. Anyway, and then the all-in sustaining costs to decrease from, they've done the same thing here, from financial year 28 to financial year 28. So I think they've made some errors in their years there, but increasing gold production, decreasing all-in sustaining costs. If they can achieve that, this company does look interesting. And on top of that, the chart is starting to look interesting. Talking about Simberi mine plan exceeding 10 years. That's also interesting. So the chart does look interesting for this company. Now on to Fleet Partners, released the half-year results. How has the share price done today? Down 5.7. Maybe I should have had this in the top 5 announcements because that's a pretty negative reaction. Share price has been a beautiful uptrend. And this could be a little bit of a bearish signal for FPR. I think the downtrend is possibly coming to an end. We want to wait the next few days just to see how the market reacts. If we see more selling the next few days, potentially the share price will bounce off the long-term moving average ribbon in this area. So we're saying between 310 and 330. There's potential share price could bounce off that area, but maybe this is the start of a downtrend. Don't know. ERW, I think I showed you ERW, did I? Erawara. Yes, did I show you this one? In any case, the one-day candlestick, oh yeah, I did, because I said, yeah, the share price has decreased 33% from the highs today. And I also mentioned this company, WTL. WT Financial, I wrote down on my piece of paper, cheap. And the share price has fallen 11.4% today. So why is this company cheap? I had a look at something and I went, this company looks really cheap. Low liquidity. So according to this, the company has a PE ratio of 5.6, market cap of 23.7, and dividend yield of 8%. So there's a few things that I just went, oh, this looks interesting. Then I had a look at the chart. I went, oh, the chart just looks meh. But there does come a point where the share price of this company might look, or the valuation of this company might look attractive based off their financials. And I'm thinking 6 cents might be okay. We also have seen a bit of an increase in volume over the past few months, particularly when the share price gets down below 6.5 cents. So I'm going to have a closer look at this company. May not be the highest quality company, but it might be some good value there. Lynas Rare Earths. I said there might be a breakout. I just wanted to say, look at the share price up today. So we give that a tick. And Integrated Research, two more charts to look at. Integrated Research, another update for the company, share price up 14.6%. Now that is 20-minute delayed. 15 points, share price keeps on rising. And the one-day candlestick was pretty stunning. And 3 big updates in a row. The market just loves this announcement. And this is another case where I could have averaged up into my position, and probably I should have done that on the Thursday when they did release this absolutely stunning, amazing trading update. And that's why the share price has rallied over 100%. Yeah, the share price of this company has increased over 100% on the back of a trading update. And yeah, you would have done really well even if you bought on that day, even at 60 cents, you've done well. So share price has increased almost 33% from 60 cents, which is the close. almost to close on Thursday. Chart still looks stunning, but I thought there might have been some profit taking today, but at this point in time, no. And I think it's in the back. And the reason why, I just think everyone is just shocked and surprised at how good this trading update is from the company, because its value is so low and everyone just hated this company. I wouldn't say hate mail, but some people wrote to me and said, this company's awful. Why would you be even think about investing in integrated research? I said, well, there's a chance it might turn around. And I think if it does turn around, it's awfully cheap. So integrated research. And the last one I just want to look at is Judo Capital, because the share price had fallen a fair bit today. Just have a look at the last price. So it has been a little bit of bounce. Share price got as low as $1.24. Now it's at $1.26. So a small bounce today, and it's bounced off my sell level. So I do have a sell at $1.24. So right on my sell level. So 2 weekdays in a row from Judo Capital. I'm not sure what's causing it. I don't think there was any weakness in the banks. ANZ's down 3%, but that could have gone ex-dividend. 13th of May, yeah, that went ex-dividend. CBA up. Westpac flat, we'll say, and NAB probably up a little bit. Not sure what's causing the weakness in Judo Capital. If I had to choose between Judo Capital and the 4 big banks, I would choose Judo Capital. Way more potential for growth in this company, but for some reason, the market doesn't like it. It could be just one fund manager just getting out. Who knows? There has been slightly increased volume in the last 2 days, so that could be the reason why. And this could be capitulation. Although I'd like higher volume for this to be capitulation. Anyway, that's all I have for today's video. If you have any thoughts, any questions, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.